Are you afraid that this market is ready to crash? You're not alone. Let's check out this week's session right now. So here we go. Let's jump into what the heck are we going to be trading? So first, we'll analyze the spiders, the Russell, and the NASDAQ. All three indices have given us a different picture for the year from what I'm seeing so far. So if we get over here and get going with the spider, today has been a really interesting day in that profit takers came in and started pushing prices down first thing this morning. As you can see here, let me blow this up just a little bit. We have not quite gotten back to all-time high on the S&P, on the spiders either. However, it's really darn close. But what I'm seeing here, Neil, is we basically have pushed up. Now, we've made a new high here. However, look what's going on with our momentum, especially the daily TSI. We've got a negative divergence going. However, this strong move to the upside, as we see here on the market forecast momentum, that intermediate line is just staying right there above the 80 line, driving sideways. And it reminds me of back in 2004, where the S&P and the indexes went on just a tear, moving to the upside. And are we in that kind of trend now also? Check it. We are above all the moving averages, which is good. That's positive. On the on the weekly charts, what am I looking at? The momentum is getting up to a point where it should want to either go sideways or roll back over. I don't know how much of a pullback it might get, but I'd be looking at doing an analysis on the spiders of this. Just grab your Fibonacci if you want to have an idea of where this might go on the retracement. Grab there and down to there, and then go to the magic fib box, which is the 618 down to the 38, and look for a retracement back into that area. Because we're in a strong bullish move right now, we may not get any lower than the 78% retracement. And the 78% retracement lines up very nicely with what you're seeing here, that past high that it broke out from. So look for a pullback into that. Is this market going to just absolutely roll over and die? I don't think so. But on the S&P, it's definitely shaping up where it needs to do some pullback, work off the high momentum, come back down here towards the zero line, and hopefully get a stop there, reversal candle up here, and the move back up to the upside. Let's take a look at the Russell. So the Russell basically is doing something very similar. Beautiful shooting star on the weekly chart on the Russell, which is a bearish reversal signal. We're at extremes on a lot of our momentum indicators on the weekly chart. Lay in a Fibonacci, just like I just did on the spiders, to figure out where this might go. And so looking for that to pull back, you've got a gap up right here. So I would put an alert at about 197. And then if that triggers, I'd go look at my charts and say, okay, am I going to bounce there or am I going to drop a little bit lower? And again, I would say throw in a Fibonacci from the high here to the low here, and then see where the lines start lining up. Look at that. That 78% lines up right with that past low, strong level. The 68 lines up with a breakout area, strong level. So each one of those could be lines of demarcation where prices could drop to and then bounce from there. And the NASDAQ. The NASDAQ I'm saving for last simply because the NASDAQ has been the best performing index over the years. And so we save that for last because oftentimes that's going to give us the best indication of where the market's going. As you can see here, we're getting something very similar to what we had on the spiders and on the Russell. We're getting negative divergence. So we came up higher high, but not on the not on the TSI on the daily basis. TSI on the weekly charts also, this higher high, negative divergence. So is that telling me that we're going to totally, am I going to sell out to the bottom side and is it going to just rip? And are we in a danger zone? At this particular point, I don't think so, but we'll know more once we get some more of the pattern in here. So if we come down here and then bounce, but can't make it back to that past high, that's telling us that, oh, the market's in trouble. But we'll find out that during the first quarter of 2024. Neil, that's what I've got for the indexes. And is your triple screen telling you to wait, or is it telling you, what's it
No,
telling you right now?
triple screen basically says caution on the QQQ actually, where the MACD has gone south just a little, but overall it's strong.
Yeah. And what we want to do also, I think, Neil, folks, if you're looking at this over this weekend, I would add a couple of things to your review just to get a sense of the power of this market or the lack of power. Is take a look at the monthlies. There we go. We've got some monthly. See what that looks like. And on the monthlies, as you can see, okay, we just turned back up on the TSI here and it's pushing higher. Those are all positive. And then 4 times a year, take a look at the quarterlies. And you're sitting there going, the quarterlies, really, Dennis? Yeah, because oftentimes the quarterlies will show these reversals like we had back here. This was back in 2009. And check that out, how the Q's just maintained itself on the way up. If I replace this with the TQQQ, check this out. Same time frame. I think that's no, because the TQQ was not available in 2009. But as early as it right here, on a split condition, was worth 37 cents, and it's run up to, and over those X number of years, it went up as high as, that's a lot. I won't even try to figure that out. But, and currently we're up for about 14,000%. And so take a look at the quarterlies and also take a look at the quarterlies on things like, and I'll just throw this out as a thought. Of course, you got to be able to spell it before you can. It just gives you a really nice, different perspective. And people don't often, because look at Tesla, the TSI on the quarterly is just off the zero line and look like it's one to bounce up. So this could be that, hey, I agree with Anil. This could be pointing towards we could be setting up for a big move to the upside going into 2024. So that's a little extra. That's a freebie for today, guys.
That was nice.
Yeah, because a lot of people, they don't think about looking at the quarterlies, but everything works the same on the quarterly. The candlesticks, the TSI, the market forecast, and that all works. And so that's absolutely fantastic. Let's go ahead and run over here. You want to stick around because we are getting into the really good stuff here. Index analysis. We were close enough to the end today to be able to lay in the numbers for 2023. The AutoPilot Trading Service is up 43%. The S&P is up 24%. And so this is the 12th year that we beat the S&P. Really pleased with that. And there's the numbers as about 9 o'clock this morning. And so really pleased with those numbers. I designed the AutoPilot trading system for people who don't want to spend all their time watching the market, where you can basically do your fire and forget conditional orders and let that work for you every weekend. And the fact of the matter is, no, we're not going to catch every one of the trades. We don't get filled on everything, but we get filled on enough to give us an upside of, on average, over 37% for the last 12 years. So I'm pretty pleased with that. Just a reminder that trading success isn't built overnight. It's built by a step-by-step process. I normally don't say anything about the AutoPilot Trading Premium membership, but it's that time of year where maybe you need to make a decision to get on board, take a test flight with the AutoPilot Trading System. Here's what one of our members has said. He came on board here recently, and I love it when people send in and say, "Hey, I'm using the system and my portfolio is heading in the right direction." Until January 5th, I'm going to be offering this at a 15% discount, and you can use this code right here. And I will put the link in the link for the membership in the description. If you found this session valuable and you're ready to supercharge your trading, take action, join our community, join us every Friday as we help you pave your path to financial and lifestyle freedom. Remember, all materials that we do provide are for training purposes. Traders should always pay per trade any new method, prior to the risk of their own personal capital. And past performance is not an indication or promise for future performance.